We're joined once again by Senior Mortgage Advisor Clinton Wilkins, and today we're talking down payments. Good morning, Clinton.
Good morning. Thanks for having me.
So is more when it comes to down payments?
Well, I think it's a double-edged sword.
Okay.
So the minimum down payment required in Canada is 5%. But to avoid the Canadian Mortgage and Housing Corporation, Genworth, or Canada Guarantee Insurance, you need to put down 20%. But, you know, there can be some challenges there. The rates are typically a little bit higher if you don't get an insured mortgage, which is typically what we consider high ratio, so anything above 80%.
Right.
Yeah.
So is that 20% down payment, is that taking some people out of the market?
You know what? I think that there's pros and cons to both.
We're getting used to it, I feel like.
We're getting used to it. And, you know, first-time home buyers, anytime it's an owner-occupied property, you can finance up to 95%. So all you need is 5% down.
So I guess really what it does is let people who can actually afford the house buy the house. Like, it's for our own good, but still it can feel a bit like a barrier.
It can definitely be a barrier to entry. Now, there are some solutions around down payments. You know, the typical down payment would come from an RRSP or from savings or investments, but you can also get a gifted down payment. We love the bank of mom and dad. It's the best bank ever.
If you're a millennial, you're calling them all the time.
100%.
Yeah.
And I think there's more and more gifted down payments happening, but there are some alternative solutions as well. So there's a product called Flex Down. So you're able to borrow the down payment. You can borrow it off a line of credit, loan, credit card, hypothetically. I wouldn't recommend that, but it is doable, so that's an option. And there's also some cashback products. So through the credit union networks, 100% financing hypothetically is available. It's through a cashback. It's still at 95% financing. They're basically giving you 5% cashback for the down payment.
Which of those options has the lowest interest rate?
100% the best way to do it is your own savings or a gifted down payment. We consider that the same. You're going to get the best cost for the insurance, and it's typically a lower risk type transaction. Typically, if you go into a cashback product, the rates are going to be significantly higher, and typically you may pay that cashback twice fold. So, you know, them giving you 5% cash back, you may be paying 10% back,
right,
based on the interest rate.
Okay, so there used to be a break for first-time home buyers. Is that still the case?
You know, anyone can still qualify for 95% financing as long as it's for your owner-occupied property. Sometimes people will buy one home and then they decide that down the road they're going to rent that one and buy a second one, and you can still qualify for 95%. The big break for first-time home buyers is they're able to access funds out of their RRSP tax-free. So you can borrow up to $25,000 tax-free, and then you have 15 years to pay it back into your RRSP without being taxed, which I think is great. And depending, there's different provinces, they have provincial programs as well. So PEI, Nova Scotia, Newfoundland have some programs where you're able to access some government grants and government financing that you're able to help with the down payment, which is great. And each province has a little bit of a different program. So I really think it's important, you know, when you're going through the process of buying a home, to sit down with an unbiased mortgage professional, figure out what you can qualify for and how much down payment you're really going to need to get into that home that you want.
Right, and maybe the home you want is not the home you're going to buy first either, right? You need to be smart about this.
Yeah, and I think that it comes back to that old adage, you know, you don't want to be mortgage poor. Nobody wants to sit in a house that they can't furnish and eat craft dinner.
Right. Yeah, but it looks beautiful from the outside.
100%.
And good for a house party because there's no furniture in there.
Yeah, exactly. And I really think for down payments, the best plan is really about saving. And I think getting on an automated savings plan has a lot of value. You know, typically people get paid bi-weekly or semi-monthly or weekly. Get your savings set up and that pattern too, and just have it automatically debited from your bank account. I think out of sight, out of mind. It's sometimes just so easy to debit off of your savings, but if it's in a product that you can't access so easily, like an RRSP or a TFSA, huge value.
And we always spend what we make, right? So if we don't have it, we can't spend it, we won't miss it.
Exactly.
It's just never there.
Exactly. And I think it's all about getting a plan and figuring out what's right for your household. And everybody's situation is unique. So I think that, you know, having a look at your total package, I think is definitely very valuable.
Okay, thanks for these tips.
Yeah,
I'm going to get saving.
For sure.
Okay, we'll see you again soon.
All right. Yeah, thanks for having me.
Thanks.